Let our panelists introduce themselves, and then I'm going to pose a question to the audience, hopefully to jumpstart a bit of a conversation here. So, Barry, do you want to start?
Sure. Barry Starr. I run a small boutique data firm called Wall Street Horizon. We're an alt data provider in the corporate event space.
Hi, everyone. My name is David Itzkovits. I am the CEO of one of the largest financial institutions, a division of one of the financial institutions in South Africa. We have 100 years old, 100 billion in assets under management, 10 billion market cap. Probably the reason why I'm here today is because we have a fund utilizing artificial intelligence that investors can buy around the globe.
Hi, Darcy Souza. I'm from Yewno. We're a Silicon Valley-based firm. We work in the knowledge economy. Basically, we ingest a bunch of information channels, construct a knowledge graph, and build alternative data feeds, index-based strategies, and then also distributed support systems.
Great. So we're all coming from very different backgrounds. I myself am the founder and CEO of Prattle. We are a research automation firm, and I'll explain what that means in a minute. But before I go into that too much further, I guess I'd love to know from this group, how many people, and it's a little hard to see you guys, but how many people out here have ever dialed into an earnings call? Okay, a few people. How many of you thought that was a good use of your time? You know, I ask this question a lot, and I hardly ever get any hands. This is pretty consistent. So what we do at Prattle is we analyze the content of market-moving language, such as earnings calls. We skirt this line between data and research. And so I think we can pick up from where the last panel left off, which is to say that I think Barry and I were talking right before we walked up here about how many times we've heard the word data today. And what we haven't heard a lot is the word research. And the very best, quote-unquote, alternative data is, in fact, research, right? It is a way to streamline information, whether it's satellite data telling you how many cars are in parking lots, as opposed to driving around and looking at that same information, right? 15 years ago, people used to drive around to see what was the number of cars in a Home Depot parking lot.
Do I get to disagree with you now, or do I disagree with you
You
later?
can disagree with me as many times as you want.
So, I don't think that research and data are necessarily the same. The model that I've always used relatively successfully in my career is that you have data is at the bottom layer. Okay, and this is trends, right? Because we're supposed to talk about trends, right? So you have data at the bottom of the layer, and this is worth writing down, by the way, because I made it up. Is you have data at the bottom layer. If you manipulate data, you create information. You add value to it by creating information. If you take information and add value to it, you create knowledge. And if you take knowledge and you add value to it, you manipulate it, you can create wisdom. Now, you can substitute some of those words for signals, for investment ideas, for a bunch of different things. By the way, my business is I do data, the bottom layer. So, I tell people, in fact, when earnings calls are going to be. You listen to the earnings call. Your business is working up that chain, and I think one of the trends is everybody tries to move up that chain to add value. My business has nothing to do with it. My business has to do with the bottom layer, which is just data. But I think that at the top, which is research, and at the bottom, which is data, are two completely separate things.
Well, let's dig into that, though, because I actually think that what you're providing actually skirts into what 30 years ago would have constituted research, right? Having a comprehensive earnings calendar can tell you when there are going to be market-moving events, right? So, in fact, maybe I'm wrong, but I think that's the core
I'll
to what
pay
you
you later, thank you.
Yeah, there you go. But no, I think this is an important distinction that we've all put up this barrier in our mind that research is somehow qualitative and data is somehow quantitative, but this is a continuum, right? And as we move, maybe it's this hierarchy you just laid out. But I think, David, obviously you're on the asset management side here, and so I guess I'm curious how you think about that continuum, and when you're procuring signals, how do you work your way back down up or down that?
So first, I loved your description, Barry, because the truth is, if you actually think about it, what we deal with is we deal with underlying advisors and clients and people that will buy our fund or any other AI capability out there. So the truth is that those early levels actually don't mean anything to an investor unless they provide the wisdom, unless you can get it all the way up. And look, the truth is that AI only has value if it can improve investment outcomes for clients, whether that's on the predictive side or on the risk management side, or hopefully a combination of both. So that's what we tend to focus on, is we're not selling data streams, we're not selling alternative data sets, but we're saying, okay, does this ultimately add value to a client's life at the end when it's implemented in a signal and trading process?
Well, I actually totally agree with Barry. And then earlier today, Olga from Constellation actually touched on a point that I totally agree, which is that you can have alternative data from traditional data. If you think about from a perspective of knowledge, alternative data would be each dimension of knowledge that you can extract from data, right? And then you can do that with fundamental data. You can do that with traditional data. Coming back to your first question at the earnings calls, right? One could argue that is today traditional data, but you can extract an infinite amount of dimensions of knowledge from that earnings calls by analyzing that data in isolate form, as well as by analyzing that data in conjunction with other data sets. And then you can extract knowledge, and then this knowledge is what I think is alternative data today.
Actually, one thing just to add, I also think that there's an idea of scalability that's very important here, because there's a lot of very interesting ideas that were brought up today. And the idea is, are those theories leverageable or scalable in such a way that if you had a strategy that did make sense, that you could attract $1 billion of investment into it? Or is it so specific that it makes it very difficult to provide it wide stream? Now, it doesn't mean that you won't have something that's successful. You could easily raise $50, $100 million into a strategy, and a firm can do quite well. But if you're going to go mass market, it has to have that next level up, which is scalability.
Yeah, so I think that actually pivots nicely into my next question, which is, so obviously there's this world of alternative data that 5 years ago that term didn't exist, right? And now we live in a world where it's becoming not just commonplace, but table stakes. And so there's been a whole lot of growing pains. I think the last panel alluded to this, that data engineering, data washing has become a huge industry unto itself. I'm curious where each of you, from different perspectives, have seen pain points and successes in the asset management industry about places, whether it be hedge funds, large asset managers, or investment banks, right? How have they succeeded or failed in actually integrating not just alternative data, but technology more broadly?
Well, I think from a technology provider perspective, we observe two key pain points. The first one is information overload, which today, particularly large firms, they already actually have access to multiple information channels. They think that the AI can solve that problem, but they don't know how, right? And then they're trying to seek for AI solutions to do two things. Number one, implement a data strategy. So how can we have a single technology that is able to process all these hybrid information, structured and unstructured, in a unique way, in a single way, where everybody from the firm can access this information in actionable form, right? So that's number one. Number two is it's tackling the problem that most of the information today is unstructured, so how can we transform that unstructured data into actionable data? So doing that by not only transforming data into actionable scores, so you can build into your models, but also tackling the open information extraction problem, which is given a document, for instance, you can not only quantify scores, but also extract structured information that is contained in those documents, right? And this could be relational information. So company A is supplier of company B, but also could be really extracting numbers and factors that are reside in that data, right? So it's really a combination of solving the information overload problem and therefore transforming hybrid data into knowledge, as well as enriching that data by quantifying actionable scores, as well as extracting information that is inside those the hybrid data.
Well, being the contrarian on the panel, technology is being used at all levels. I mean, all levels. And clearly, in the panel before, people using to manage, control all the different data sets and things like that. The part that I always find interesting is, and it was mentioned, I think, a couple times this morning, about how 80% of a data scientist's time is being spent cleaning up data. We actually took that upon ourselves. That has actually become our whole business at Wall Street Horizon, is that we have created an extremely accurate data set that obviates the need to clean the data. Now, that's not true with all data sets, and we find mistakes once in a while, but very, very rarely. But one of the ways, I guess what I'm saying is that we use the technology on our side to create the extremely clean data, as opposed to giving a, relatively messy, we'll just clean whatever, we'll send you whatever data we can find, then you get to go fill in the holes yourself. So we've taken, I guess, the technology piece and we've internalized it to create solution, and that's how we create a benefit to the client. So still using technology, but a little bit different than others.
So I think it'd be worthwhile to throw a little bit of data behind this, actually, which is to say, I think there's this perception in the industry that everyone's doing, right? Everyone is using alternative data. Everyone has machine learning or AI as part of their process, and that is wildly untrue. I think the last numbers I saw on this, Bloomberg ran a survey at the end of last year, only 18% of asset managers globally, not AUM, but asset managers, right? So a lot of small funds there, are actively using machine learning in any part of their process.
Yeah. When somebody calls us and says, I'm looking for blah, 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 and all the buzzwords come out, we spend a lot of time teasing it and pulling apart and saying, get out of the buzzwords. I don't want to talk about machine learning. I don't really care about AI. It really comes down to what is the investment problem that you're trying to solve. And we have a data set that we can use to help solve that problem. And actually, we even go one further, which is that if we can't solve it, we'll point you in a direction to someone who can solve it. But it's become very buzzword. In fact, we were talking about alt data before. Alt data, people have been doing channel checks for 40 years. Alternative data has been around for a long time. Therefore, I'm not even sure the term is right. But, it's the alt data conference, so I guess that's what we're going to call it.
Yeah, to that point, I think one of the biggest challenges, again, is that people like to sound sexy, right? They like to say we're using AI, we're using machine learning, but if you actually look at investable solutions where a client can actually go and put their money, Greg mentioned earlier before, he said, put your money. You got to have money and you got to be able to put it somewhere. That's very hard to find. There are very few funds out there that actually are using artificial intelligence. Now, a lot of investment managers like to say that they're starting to use it, but the way they're actually incorporating artificial intelligence is really more on the back end from a efficiency standpoint, from a cost-saving standpoint, less in the investment decision-making process, asset allocation, security selection. That's where AI has a tremendous amount of value that it can add to the industry, if anything, because it does it in a very different way. So, as an example, when we talk about our fund, we actually don't talk about artificial intelligence. We say that we leverage and we use artificial intelligence, but basically what we're trying to give clients is a differentiated path, right? Why invest in another human manager that's going to react like all the other human managers, right? Some might be better, some might be worse, but when you're constructing a portfolio, you want things that are uncorrelated. And potentially that's what AI can give you because it acts just in a very different way.
I think that's a good point. So I think One of the important implications of this is, the idea of deciphering what's marketing speak versus what's operationalized. So I myself have been brought in to speak as a quote-unquote expert on AI and finance at client conferences, had been flown halfway around the world, spoken on stage in front of hundreds of people, and then still not gotten a contract out of it because they were using me for marketing value, right? And that's not an uncommon story amongst alternative data vendors. That's not an uncommon story amongst people in the space who have been, who have been told what you're doing is innovative. We want to do it. We're just not ready. And so I guess that poses the broader question, which is what in all of your eyes, what's the pace of adoption of this? When does this, the last panel seemed to think that it was within the next 5 years, all of this was going to be commonplace. Do you guys agree with that assessment? Do you think that there's a different timeline or stages here?
I think in order to really have adoption, we need to solve the so-called FAT issues: fairness, accountability, and transparency. I think we observed that while there is a growing traction in the use of AI, there is a growing concern as well. So first, we need to make sure that we have models that are fair, that are transparent, and when the decision is made, one could not blame the machine, but actually there is a clear and transparent process on who is accountable and then how to enforce transparency. When we solve these three key issues, maybe the large asset managers, they'll be more comfortable in employing AI.
So let me give you a large corporate viewpoint. Because we have $100 billion in asset management in the firm, and obviously we run a few $100 million in AI investments. The challenge with large firms is that you have incumbents within the firm, and they are protecting their category and their territory. And the challenge is that you have these new types of solutions that can potentially pose a threat to things that have been done more traditionally in the past. So the challenge is ultimately, people say, how do clients feel about the adoption of AI? So I speak to advisors and clients all the time. Clients are actually very excited about AI. They want something different because, it was mentioned on an earlier panel that you have a lot of unhappy clients out there that don't feel that they're getting value for how much they've been putting in. So the challenge is you have to give them something that provides actual value to their lives. And from a large company aspect, until you get the investment managers or the institutional people that cover mandates, the consultants, that's the hurdle. You have to get them across the line. Getting clients across the line is actually not that difficult.
You asked the question about clients and how many clients are out there, how many funds that are using these types of tools, and I think the answer is pretty small. In your typical adoption bell curve, you've got innovators. I'm going to do it backwards because I can't do it my way here. No, actually, doesn't matter. We're going to you got innovators, you got early adopters, you have late adopters, and you have laggards. The innovators come and gone. They've been using it. The big hedge firms, they hired, 10 years ago, 15 years ago, they had the big data scientists. They've been working up. We're now into the space of the early adopters, and the only reason why I know is I can tell by the types of questions that come from people who ask us about it. In the old days, we would begin to have the conversation. They'd say, forget it, I don't need to know. I know everything, just give me the tech doc, and here's my needle, stick it in the vein, and send me the data, machine readable, and we're done. Now that we move into the next phase, it does require a little bit more explanation. We have to talk about use cases. We have to talk about models. We have to talk about signals. We have to, we work with folks, and we add value. We say, you want to try and do that? Well, that was done 15 years ago. Eric So at MIT debunked that in his paper, or Sri Santosh at University of Chicago or wherever it is. So we do see that the types of questions that come in from prospects is very different from what it was 5 years ago as the market continues to build, but it's still wide open.
So now I'm going to disagree with you a little bit, which is to say what we've seen in the market, especially vis-a-vis those innovators, the very earliest adopters that have been looking at the very least big data, if not alternative data, for 10 or 15 years. The challenge we've seen is that a lot of them are running on legacy infrastructure and legacy methodology. If I'm ever going to say anything important, which I rarely do, probably the most important thing I've noted is that traditional methodology for analyzing data is to determine, is this additive to my model?
Yeah, correct.
That is not a sufficient way to test most alternative data sources. You should be testing, can this replace any of the existing signals I've got more efficiently? If you're running a multi-factor model that's a garbage can model from the last 20 years, where it started as a dozen factors and it's now 70, right? You're testing some new data source, and if it's not picking up on incremental variance, you're tossing it out. Well, there's a pretty strong possibility that actually what you're able to do is go in and plug that in place of 5, 10, 15 other data sets, cut your data spend, and improve the statistical power of your model. Traditionally, these large quant funds have actually not done that, right? And so that's an area where we've seen significant issues in legacy infrastructure from those earliest adopters, those earliest quant funds that are unwilling to sort of break that mold, and we have to walk them through it. This is something that's quite important. I'm curious, have you seen the same thing?
Absolutely. So I would break down the use case in two types. One type is really the client does not want to change the investment process. They want to augment the investment process using AI. I would say 80% of the cases are like that. And then AI comes into place as a way to implement more powerful cognitive skills. But the investment process is exactly the same, right? Which, of course, it limits the power of the solution that you can deploy, but that's where we are today. And then the second case is where there is more flexibility, where the goal is actually, can we replace the process for a process that is more efficient, and then really there is more flexibility on really accepting this new AI technology in a way to really revise the whole process of the company. Today we are, most of the cases are type number one, unfortunately, but I think it's a way to penetrate in the market. We start by augmenting a framework that is in place, and then when you get trust, you show that you can offer transparency in the process, you can start a conversation on replacing a legacy framework.
You mentioned research near the beginning of our conversation. So AI really has two main benefits with regards to that, and it's sort of the discussion that we're talking about now. One is that AI can obviously enhance significantly the analytical power and research capability. It amplifies it by magnitudes. But the second one is that it's continuous, that it's learning, that it's adaptive. That is real AI. And the challenge is that a lot of the algos today, we know, we've talked about them, we've seen them, they're not. They're fixed algorithms. So the challenge when you add it to an existing model is your existing model already starts with sort of a fixed framework and a rules-based system to which it's trying to then sort of find the right rules. When if you actually look at what AI is supposed to do, AI should start with no rules. It should analyze large market sets of data and develop its own trends, understand its own research. The research should actually be coming from the AI. The training ideas come from the AI, not what you feed it beforehand.
Yeah, I think this is an important point. It's actually one of the things that I think is sort of near and dear to my heart, working in the text analysis space. There's a lot of people out there who've built text analysis tools predicated on their opinion of, is this positive or negative, right? That's fine, but it's endogenizing the bias of whoever actually scaled it. What you're suggesting is having an AI train off of some broader set of information. That's actually something that we've worked very hard to do, to be able to analyze language based on how the market has historically responded to it. Because when push comes to shove, I couldn't care less what your analyst says. I care how the market's going to react. And I think that's a huge distinction. I think we've started to hit that tipping point in the industry where people are realizing that there is a big difference between those two different types of, at a minimum, machine learning strategies.
Look, AI is not the end all. It's not the silver bullet. Far from it. All it can do is maybe give you a little bit of a predictive edge. That's it. It's, any AI capability that you see out there that says we get things right 70, 80, 90% of the time, it's hogwash. That doesn't happen because it's constantly trying to learn and even predict the predictive accuracy just slightly. But one of the biggest mistakes that, at least that I've seen in other AI capabilities, is that they focus on one piece of the value chain, which is getting the prediction correct, but where they don't focus on the risk management side. And the truth is, if you actually run people's money, you don't lose people when markets are up. Risk is asymmetric, right? I had a saying when I ran money that when markets are up 20%, no one ever called me to say thank you. But when markets were down 20%, my phone was ringing off the hook. And if you can get that piece of right with AI, that could be a big winner.
But I think there is a paradox in the trade-off here. So first, it's clear that AI systems should be able to learn by themselves and then evolve with time, as opposed to having a rule-based system. On the other hand, depending on the use case and the target client, this imposes a lot of challenges, right? So we work a lot in the index space, for instance, and then if you look at desired characteristics of a given product in that space, the number one is it's a rule-based strategy, right? So how can you develop an AI-driven strategy that is really evolving over time without having rules, but at the same time having a rule-based system? So that's the trade-off, and then that's the paradox. But that's where I come back to my first point, where really how to deploy AI systems with transparency is one of the big challenges that we face today.
Well, I think this is an important distinction in the entire industry at large, which is to say, when does it cease to be a people-centric industry and become a technology-centric industry?
Yeah. So David raised a really good point, and we don't do AI per se, but you said if it can give you a little bit of an edge, it's like the old joke, it's like the old story, two guys running the forest with a big bear behind you, and one guy says to the other guy, right, says, do I have to run fast, do I have to run faster than you? No, I just have to. Do I have to run faster than the bear? No, I just have to run faster than you. That's what the story is. So all you need is an incremental edge. In my business, we do incremental edge on data. The big box terminals create, develop or distribute pretty good data. We distribute really good data, and our clients make money arbitraging the difference between pretty good data and really good data. And the same's true here, is that, if you can have an AI-based model that can give you, a couple of points, that's all you need.
And that's really what it is, just a couple of points.
Well, and I think a lot of those points at this moment in time still come from efficiency more so than the quality of the signal, too. I think that's been the proven gains so far in the AI and machine learning space. Before we wrap up, are there any questions from the audience? You guys out there? Yeah, go ahead.
So David said that there's the incumbents at his company have trouble understanding how to adopt or wanting to adopt this type of either artificial intelligence or alternative data. How do you get those people to buy in?
It's tough. I won't lie. Look, particularly large firms, it takes a little bit of time. So one of the most important things that I talk about with regards to artificial intelligence is live operational experience. You need live signals. So we were talking about IBM Watson was up here before, and they mentioned, if you have a good AI solution, put it into the market, let it start to get real operational experience. So our fund is a 5-star Morningstar fund, right? It just got upgraded to 5 crowns 3 weeks ago. That's because it's live in the market, and they've seen the results, and it's doing pretty well, competitive compared to its peers. And that's one of the biggest things. So there's going to take time. There's going to be a traditional set of people that, to be honest with you, is just going to take time and proof they can come across. And the truth is that particularly for advisors, where they feel that their value add is potentially making investment decisions for their clients, what you have to show them is, what can the AI do for you? Yes, it can give you better risk-adjusted returns, it can give you better Sharpe ratios, et cetera, but how does it improve your life? Well, it takes time away. Instead of having to focus on analyzing which stock to pick, you can spend it with your clients, understand your clients better, understand their pain points. That's actually what advisors love to do. They love to make the relationship with their client, understand and grow that relationship over time, so you allow them to focus on really what they love to do and what they do best.
Yeah, and I think this is a big piece of where the industry is today, which is there are efficiency gains to be had across the board from technology, AI in particular, but I think across the boards from technology broadly.
And it's not only on the top side, it's not only about making money, it's also about not losing money.
Right. Yeah. All right. Oh, we got one more question here.
What does your tech stack look like, and how do you manage your sort of engineering process? For everyone?
Well, you know, for us it's easy. We don't use technology to replace people. We use technology to augment people. So we have a whole bunch of data analysts in our firm that collect data. We still also have 500,000 lines of proprietary code. The code is there not to replace data analysts, but to make their job better.
Well, engineering is at the core of our company. We are a data-driven company. Everything starts from really data acquisition, which comes from really tackling the public data problem ourselves, as well as partnering with key companies. The very first step is really to making sure that everything is point in time, because if you are not guaranteed that everything is time-stamped in a proper way at the beginning of the process, everything else will be compromised. Then it's important to have validation points throughout the process, because we work with hybrid data. Most of our data is unstructured today. We work in a multi-vertical strategy. We ingest data not only from finance, but also life sciences, education, publishing, government, among other verticals. And then it's really challenging because data from these space, they come in different forms and way and shapes. So the very first step is to really synchronize, timestamp everything in a proper way, have validation points and normalizing everything, so we can map everything to a symbology system. And then it really comes down to ingesting all this data into our knowledge graph. That is our single technology that is able to really extract knowledge from all these multiple information channels. So when you look at our knowledge graph, everything is already normalized. You can look at our knowledge graph today, which has millions and millions of concepts. A concept for us is really an entity, a person, a technology, a country, region, an idea, an event like Brexit. Buzzwords today like data privacy, trade war, tariffs are all concepts in our knowledge graph, and we correlate all these concepts together to form a network that represents knowledge. So we can ask questions of why is certain entity connected to a certain event, or what are the companies that are exposed to trade war or tariffs, and then you can ask these questions, and then you can create either alternative data feeds, index strategies, or perform research. So this is a summary of our pipeline. It's really a multi-vertical, hybrid data, and knowledge-based, knowledge graph-based product construction methodology.
So I'm being told to wrap it up, but the quick answer to your question for me is we run our own proprietary back-end data science software. We actually are able to go from static models all the way to fully deployed production level code, literally through a series of drop-down menus. So we can bring in a 22-year-old stats major straight out of college, and by day 2 have them contributing to our core code base. It's allowed us to iterate on model development, model deployment a little quicker. We also run our own suite of named entity recognition models. If you want to get technical about it, it's a suite of bidirectional long short-term memory models with a novel voting software overlay to select the right model at the individual letter level. I can go a lot more detailed on that.
My answer is I'm not going to tell you, because it's a secret.
So I was going to say, this is, we can go down this road very, very quickly, I think, here. Why don't we call it a panel with that? So thank you so much, guys.
Thank you so much.
Thank you.
Nice job, Barry. Good job.